All right, good morning, everyone. I'm Ashley Abrams, Chair of the CAR Professional Development Committee, and I welcome you to the March Latte and Learn. This session is going to be focused on reverse mortgage, and our guest speaker today is Matthew Harrison. Matt is a seasoned professional with over 2 decades of experience in the real estate and mortgage industry. He carries a certified reverse mortgage professional designation and is a Fuel Inc. mentor and coach. His areas of expertise include a passion for reverse mortgage, building partner relationships, mentorship, coaching, and helping others. So Matt, thank you for being here, and I'm going to go ahead and hand the session over to you.
Appreciate that, Ashley. Thank you.
Well, hey Matt, can I interrupt you for a minute? I'm sorry. I want to just add one thing here. This dude is so passionate about reverse mortgages and what they can do for people. Like, this is all that he does. That is his one and only focus, which I think is very impressive. So sorry, go on.
No worries about that. Yeah, and you're going to understand my passion for reverse mortgage as we kind of go through the slideshow today. And really, this is all about educating you on a program that is very misunderstood. And I work with Carl, and as he said, the only thing that I do is reverse mortgage. I've spent a lot of time really studying the program and how it works, and now I get the opportunity to teach real estate professionals such as yourselves, financial planners, estate planning attorneys, divorce attorneys, and so on, CPAs, how this program is actually designed to work. And it is really fun because it really does change lives. So I'm excited. I would ask you, we've got about 55 minutes to go through a ton of information. I'm going to try to keep it as simple as possible. I would ask, we will have a little Q&A section at the end. And if you wouldn't mind, write down your questions or kick them into the chat. We will field as many of them as we possibly can at the end. But again, this is a program that is really, in my mind, it's worth hundreds of thousands of dollars to you personally. And again, it's worth that as far as additional business that you're going to be able to see by using this program and incorporating it. Okay, so I like to start out this question, and I want you to kind of think about this for a minute. What is most important about retirement to you? And a lot of the answers to that question will come in and say, hey, I want to enjoy retirement. I want to maintain the same lifestyle. I want to be able to go travel. I want to, hang out with my grandkids. I want to be healthy. I don't want to worry about money. So all of these are going to be important pieces as we start to think about, okay, we're either close to retirement. It might be a long ways away. But what are those pieces about retirement that are going to be important to you? Now, when I ask Google, what is the #1 top concern for our retirees today? The answer that comes back is, as you would probably expect, all relates to money, right? So maintaining an income stream, outliving savings, outliving assets, outliving money, running out of money, grown kids siphoning off retirement money. And so these are the top hits that are coming from Forbes, Morgan Stanley, CNBC, Money.com, Bankrate, and others. So if we think about it, if money is the #1 biggest concern on the mind for our retirees, cash flow obviously is going to be important. And when we start to talk about cash flow, we really are looking at 3 different buckets of money that we have pre-retirement, and then also in retirement. So pre-retirement, bucket #1, that's going to be our income. This is money that we're making. And hopefully we're taking some of that money that we're making and putting it into what we call bucket #2, which is our nest egg. This is going to be retirement savings, 401ks, as far as real estate professionals, it might be, putting money into other properties. You're really building for a way that you can start to take money out at retirement. But most of us put a whole lot more money into bucket #3, which is what we would call home equity. So as we get closer to our retirement years and when we get into retirement, generally the monthly income that we have or have had coming in from bucket number one starts to decrease. Hopefully we have enough money in bucket number two to help us to, live through retirement. And let's be honest, hopefully thrive in retirement. I don't think there's anyone here that just has it a goal to just survive retirement, right? We all want to thrive in it. We want to be able to enjoy it the best we possibly can. But a lot of us miss out on the importance of using bucket number three, okay, which is our home equity. So a question that I'm going to pose to all of you, and I want you to think about this. If cash flow, which is money coming in, right, versus money going out, if that is the number one biggest concern for our retirees, does it make sense to have a mortgage that requires monthly principal and interest payments after you turn 62? Now, again, this is something to think about, okay? I am fully in the camp, obviously, that would say absolutely not. It does not make sense to have a mortgage that requires a monthly mortgage payment after age 62. Why? Because at that point, or when we're starting to retire, cash flow is very, very important. And if we can save the monthly payment that we're currently making on our mortgage and not have to make that payment anymore and use that money instead for life, use it to invest, use it to go out on vacations, use it to, enjoy, some better dinners, or just put it into savings. When you use your money that way, it's just more efficient. And we're going to be talking about a little bit about that today as well. So the question that I'm going to ask is, if cash flow is king and, we look at, opportunities to not have to make a monthly mortgage payment, a reverse mortgage is a way that can allow for our seniors to access equity in their homes, not have to make a payment, and be able to retain those funds. Okay, so I want to ask this question, and probably good, in the chat, go ahead and throw in an answer here if you've got the ability. As of right now, do you have a reverse mortgage as a part of your retirement plan? Or would you recommend one to a friend or, a family member? So why don't you go ahead and put in the chat for me right now what your answer is. Yes or no, is this a part of your plan? Okay, perfect. And I got to be honest with you, most of the time when I start this class, the answer is no, right? And the reason for that is going to be a lot of different things. We do have a couple of yeses, one from Carl, one from Sarah. We're going to start to go through, and please put in the chat, for those of you that said no, what would be, in just a simple, couple words, what are the reasons for why you would not recommend a reverse mortgage? Because this is from Dr. Wade Pfau. He's a PhD in financial planning. He says, use strategically, a reverse mortgage can greatly improve the sustainability of your retirement income. Now, who doesn't want to have more sustainability in their retirement income? I think none of us would say that we don't want that, right? So we need to go through what are some of the issues and problems and underlying fears. And by the way, fear is an acronym, stands for false evidence appearing real. What are the fears behind reverse mortgages? Okay, and we're going to talk about those.
Matt?
Yes.
Hi, I'm Mazi. Would you please explain in like one sentence again the best way how to describe reverse mortgage?
Sure. So
Thank
a
you.
reverse mortgage is a way for seniors that are over 62. It gives them the ability to tap into a percentage of their home equity without having to make principal or interest payments back. And so, and I'll go through the three different, actually, we'll just do it right now. There are three different ways to use a reverse mortgage. Okay, first, if you have a home that's paid off free and clear, okay, so you own it. It's yours, paid off, you don't have a mortgage payment. Unfortunately, all of that money is locked away in home equity. And you can't use home equity to go buy something at the store, right? Or to take a vacation. You've got to convert it into cash. And the way to convert it into cash would be you either sell the house or you do some sort of a loan program on it. If you are over 62, you can use, obviously a reverse mortgage to, to create a cash flow position in this home. And this is how this works. So let's say that the home is worth, I don't know, $500,000. I'm just throwing it out there. And you're 62. You might have access to a line of credit within this reverse mortgage. Let's just call it 200,000. And that $200,000 amount is now sitting in a line of credit where it's liquid and growing for you. Okay, this is available money that you could draw if and when you ever need it. Now, the difference between a reverse mortgage line of credit and a home equity line of credit is that a home equity line of credit, as you take money out, you have to make payments back on it. With a reverse mortgage line of credit, any money taken out, you do not have to make payments on. And that line of credit has a growth rate. And so it is growing for you every single month, which means that there's more money available for you. So those can be some of the main differences there. So for those over 62, you can access a portion of your home equity and you can draw it as you need it. Okay, it can also come to you as far as a lump sum or monthly payments. The second group of people that can use a reverse mortgage would be those that are currently making a mortgage payment. So let's just go in that same example, $500,000 house. And let's say that this particular borrower owes $200,000. Okay, and I'm going to say that the reverse mortgage has enough money to cover that 200,000. So the reverse would pay off the current mortgage. Okay, so we're kind of refinancing out of that.
Nice.
And now that monthly payment that client had, they no longer have to make. So let's say the monthly payment was, I don't know, $1,000 or $1,200 a month. They no longer have to make that payment. In other words, they're now able to cash flow that payment that they don't need to make. Right, so that's going to be a big benefit for them. Now, the third group of people is going to be those that are in the wrong house. We're going to be focusing in on that today. But let me give you an example. All right. So my dad was the very first reverse mortgage that I ever did. And he was in a home. It was a $300,000 home that was too small for him. And he wanted to have something bigger, better, nicer. He wanted a pool. He lives out in southern Utah. And anyway, so the home he wanted to buy was $620,000. And he came to me for financing. And I said, okay, Dad, you got a couple of options. You can sell your $300,000 house and put that as a down payment and purchase this $620,000 home. You could take out another $320,000 out of your retirement account, so you pay for it cash, right? That's option number one. Option number two is you could get a loan for about $320,000 and buy this house. But, after we went through the monthly payments, and he's like, yeah, that doesn't really work. I'm not very excited about making that payment, although I could, I don't want to. Option number three was to use a reverse mortgage to buy that house. And so listen to how cool this is. He sold his $300,000 home. And to purchase a $620,000 home, he was required to bring in $380,000. Okay, so he cashed in the $300,000 from the sale of his house. He took out about $80,000 from his retirement accounts, and he used that money as his down payment investment on this $620,000 brand new house. So the reverse mortgage proceeds brought in the rest, right? So it was the loan vehicle that he used to purchase the house. And from that point moving forward, his obligation to make principal and interest payments became completely optional. He can make them if he chooses, but he doesn't have to. Now, what he does need to do, he needs to continue to pay property taxes, homeowners insurance, maintain the property, and keep it as a primary residence. So those are the pieces to this, right? That's kind of what this allows for this client, my dad, to do. So I guess the easy way to answer your question, that was a long-winded answer, but it fed in very nicely to those three. A reverse mortgage is a vehicle that allows homeowners the ability to access a position of equity in their homes. And if they don't use all of the available proceeds that the reverse can provide, then the rest of it goes into a line of credit that's available for them to draw. Okay, they retain full ownership to the house. And really one of two things is going to happen. They're either going to sell this home some point in their lifetime, or they're going to pass away while they're there. And we're going to talk about that as we kind of get into that part of the discussion.
So you think that people would be opposed to the reverse mortgage because they would have almost nothing to leave to their heirs, or like to their children? Or so why would people be opposed to that?
Yeah, so again, this is just all about them learning about it, right? My dad, when he did his reverse, said, Matt, what's the catch? Am I missing something?
Right.
This is like the coolest thing ever. Like, why doesn't everyone do this? So the top concerns that we hear, number one, is that for some reason the bank owns my house if I do a reverse mortgage. Now, that's not the case. Prior to 1989, when this program was rolled out, it was not FHA insured. And, there were programs that, yeah, you basically gave your house away, in order to do this program. But that's not what it is today. So you do retain full ownership to the house. When you pass away, the ownership goes to the heirs of your estate. So that does not change. The second biggest fear that surrounds reverse is one that you already mentioned. Well, if I do this and I've got a loan that I don't have to make payments on, and it's going to be increasing through time, there's not going to be any equity left. And I'm not going to be able to give my kids anything. Okay. So the reality is most of the time, over 99% of the time, there is equity remaining. Why? Because the reverse mortgages, if this is the value of the house, reverse mortgage is not giving you full access to that value. It's giving you a percentage.
Nice.
And through time, both the loan amount and, again, projected real estate value continue to increase. So at some point, when, if you decided to sell this house and you have a reverse, you list it for sale, pay off the mortgage balance, the remaining equity position is all yours. So if you pass away, the same thing. The heirs of your estate have an option, right? Do they want to keep the house or not? If they want to keep it, then they just refinance or pay off this loan balance and they can retain the house. If they don't want the house, they list it for sale, pay off the mortgage balance. The remaining equity position goes to the kids. Okay. But what happens if we're in a really down market? Okay. We repeat 2008 all over again. So the value is no longer here. The value is now under the loan amount. Okay. We're underwater. This is a non-recourse loan, which means that the heirs of the estate are not stuck holding a bill. They do not have to come in with a dime unless they want to, okay? In fact, they have the same two options. Do they want to keep this house or not? If they want to keep it, they can get an appraisal, and the reverse mortgage allows for them to buy it at 95% of the current appraised value if the loan balance is higher than the appraisal. Okay, so they could get a steal of a deal in a down market and be able to retain this home indefinitely or wait for the market to go back up and then sell it. Again, the difference between what they buy it for and what is owing is taken care of with the mortgage insurance. But if they
Nice.
don't want the house, they wash their hands of it, say, bank, here you go, and they're out. So 0 repercussions against the estate.
Mm-hmm. But what about the taxes, the capital gain taxes they would
So,
have to pay?
yeah, so when it comes to taxes on that, again, I'm not a CPA and I'm not giving you tax advice, right? There's going to be, different estate taxes that are going to be in place, as far as how all of that relates at the end, right? So but no different if they were to pass the home to the heirs. Let's say they owned it free and clear and they passed it to the heirs. Is there any estate tax on that asset? If they were to sell the property instead and then divvy it out to the heirs of the estate, would that be taxable? Could be. It just depends on, again, how the estate is organized.
Right. Yeah.
Amount is. I will tell you though, there are massive, massive savings available for this program when it comes to taxes. If I can get to it today, I'm going to, but my highest recommendation for each one of you after today's little latte and learn is to set up a time with Carl so that we can go through this with you one-on-one, because I promise you, we're talking about, again, hundreds of thousands of dollars of not only additional cash flow and income for each one of you, but tax savings as well, which is huge.
Nice. Thank you.
Okay. So in the old days, this loan was seen as a loan of last resort, which meant if we were retired, we would use all of our money from our retirement accounts. We'd use everything in our checking and savings. And if we had to, the last thing we would do is draw on the equity position of our house. Now you can do that, but it's not the most efficient way to work with your money. And again, this is not just coming from me, it's coming from Dr. Wade Pfau, Dr. Barry Sachs, Jamie Hopkins, PhDs in the financial planning space that have done all of the simulations to say, okay, this is what life looks like with a reverse mortgage, and this is what it looks like without. And if you do it with a reverse mortgage, it is a much, much prettier picture. Okay. So now, in today's world of financial planning, this is a financial planning tool and best used as soon as you can start it at age 62. Now, I'll be the first one to tell you, I am doing a reverse mortgage the moment I hit 62, and not because I need it to survive. I know the math. For me personally, this is worth over $1.5 million in additional cash flow and net worth to my own retirement account. All right. I would love to show you what this is worth to you for your own retirement accounts if you decided to do it. But again, there's nothing wrong with not doing it. I'd just rather have the additional liquidity. I'd rather have the additional cash flow. That's really big for me personally in retirement with my own retirement goals. Okay, so let's talk about what a HECM is. You'll hear this acronym every once in a while in the reverse space. HECM stands for Home Equity Conversion Mortgage. The nickname for it is reverse. And again, there are two types of HECM loans. Okay, there's a HECM for a home that you currently live in. All right, so if you're in a house, it works for you, you can do a reverse mortgage on the home that you're in. The second way is to use it in a home that you want to purchase, as far as the financing arm for that. So here's some of the features for the HECM program. First off, borrowers retain full ownership of the home. Monthly principal and interest payments are optional. Okay, now I say optional because you can make a payment still on this reverse mortgage, and it is a wonderful thing to do every once in a while. Okay, I'm going to give you a little bit of an idea about why. For anyone that has a mortgage right now, and I have one on my own home, all right, I have to make a monthly mortgage payment every month. If I don't pay, I can't stay in this house. The second hard thing about that is once I make that payment, I can't take it back, right? I can't call my loan servicer and say, hey, I've been really good at making my mortgage payments over the past 5 years, 10 years. I'd like to have some of that money back. I want to take a trip to Paris. They're going to say, no, Matt, this is not how that works. You know, you're not allowed to take money out of that account. If you do a reverse mortgage, okay, and you decide to make a payment, and by the way, every statement that you ever get in the mail is going to say that your payment obligation is 0. You do not have to make one. But if you do, 3 things happen. First, any amount of payment you make is going to lower down the loan balance. That's pretty self-explanatory. Second, dollar for dollar, that payment will go into a line of credit where it is liquid and where it is growing, and growing at the same interest rate that the loan balance is. So think about it as you're kind of moving money from checking into savings, but now you're moving it from savings into your line of credit with a growth rate. That money grows independent on what the value of the home does. So this is a protection against any fluctuations within the real estate market. So line of credit grows, okay? And by the way, money withdrawn from the line of credit becomes a part of the loan balance again. Thereby, it is not seen as income anywhere. All right, so a great place to park money. Third, you probably paid some interest. All right, now I'm going to hit this real fast. Interest is a wonderful thing in the mortgage space, right? If you pay mortgage interest, you get a 1098 at the end of the year that you can use around tax time. The sad thing is that most of us, when we're paying this mortgage interest, don't have enough of it to actually trump the standard deduction that is available when we do our taxes, right? So you have itemization and standard. Now you're all real estate agents. I am hoping that you itemize. But what I want you to think about for just a minute, and again, this might be something I'm going to have to unpack with each one of you individually later, but I want to at least start this with you. So pay attention. This part's really important. Let's say that your loan balance increases by $50,000 over a period of 4 years. Okay, that's interest on this reverse mortgage. And let's say that you have a good year, you know, in your investments or whatnot, or let's just say that you wanted to take $50,000 from a 1099 or something like that, right? It's taxable income that you have coming in. And you take that $50,000 and you make a one-time payment of $50,000 on this reverse mortgage. Again, 3 things just happened. Your loan balance decreased by $50K. Your line of credit increased by $50,000, which is completely liquid to you. And you just paid about $50,000 of mortgage interest. You would get a 1098 in that tax year for about $50,000. I'll let you guys kind of mull that around in your mind. That is great around
It's
tax
very
time.
cool.
Okay, so this is a way to use this program, and I like to call this loan the Swiss Army knife of loans. Okay, there's so many ways to use it. We're unfortunately not going to be able to hit all of them today, but that's okay. Please, like I said, take me up on this. Please connect with Carl. Let's get something set up so that I can go through this with you in detail. Okay, non-recourse loan, we talked about that. So again, there's no repercussions against the estate should the loan balance ever go higher than the value. And again, there's multiple payment options. Borrower's responsibilities, pretty simple. Okay, you have to continue to pay real estate taxes, pay your homeowner's insurance, maintain the property or pay HOA fees, and continue to live in the home as your primary residence. Okay, so what happens at the end? Okay, we kind of talked about this, right? There's equity, no equity. So just to preview it again, if you owe more than the value, no equity remains. This is a guaranteed short sale where the heirs can purchase the home for 95% of the current appraised value. If you owe less than the value, equity is remaining. Heirs can pay off the current mortgage balance or sell the home. Equity remains with the estate. Or you can sign the home over to the lender with a deed in lieu of foreclosure. Okay, or just let it go into foreclosure. So those are going to be the options, but there is zero repercussions against the estate and they are not stuck holding the bill. Timeframes, simple. At the end, the heirs of the estate have 30 days to let the loan servicer know what their initial intent is, whether to keep the house or sell it. And then they have upwards of a year to actually execute on that plan. During that time frame, they do not have to make monthly mortgage payments. It's not like all of a sudden mom and dad died and oh shoot, now we've got to start making payments on this. By the way, when my mother passed away at 55, it was very sudden. None of us were prepared for it. And I was the only one of the siblings that had the financial capability in my 20s to stroke her mortgage payment on her farm in Kansas. And I could only do it for 1 month. So we had to fire sale the house before it went into foreclosure. It would have been really nice. Had she been 62, it would have been awesome. You know, if she would have had a reverse mortgage and we didn't have to go through that. You know, we could have taken some time to kind of, you know, mourn the passing of mom and, you know, also kind of put together what we wanted to for the estate and then sell it at a better time during the year than in the middle of winter in Kansas. Okay, so opportunity. There are so many baby boomers right now living in homes that do not fit their needs. Okay, and monthly cash flow and net retirement funds for many are limited. In the past, if you were 62, you only had 2 options. And if you wanted to buy a house, okay, you could buy it cash or you could get conventional financing. Here's the issue. If you get conventional financing, again, you have to make a monthly mortgage payment. And after 62, it does not make sense to do that anymore. If you don't have to, okay? If you buy it cash, you are taking 100% of your proceeds, of your liquidity, and you're putting it into an illiquid asset. All right? Now I want you to think about this for a minute. Is that the very best play? After age 62, does it make sense to purchase a home with 100% cash? Now, I get it. I was a real estate agent for 14 years. And whenever I had a client that came to me and said, Matt, we want to buy this house. I said, great. How are you going to pay for it? Well, we're going to buy it cash. I said, yes, I don't have to worry about a loan. This is an easy deal, strong offer. We're going to make this happen. But if I'd known about this program, I would have said something like this. Mr. and Mrs. Smith, I appreciate the fact that you can buy this home cash. However, I'm aware of a program that can allow you to keep more of your cash liquid that you can use in retirement and still achieve the same goal of not having to make a monthly principal or interest payment. Would you be interested to learn more? Because here's the reality, okay? Let's say that I'm 62 and I want to buy $1 million property and I've got $1 million in my account. I can do that. Does it make sense for me to use all million, all full 100% $1 million that I have in my account? Or if I did a reverse mortgage and I used it to purchase this house, okay, this is the financing arm to purchase this property. I might only have to bring in $700,000 if I'm 62 to buy that house. The reverse mortgage proceeds of about $300,000 would come in and take care of the rest. Well, for me, that means that I get to keep $300,000 liquid that I can park somewhere. I can put it with a financial planner, having it grow, or I could go buy another investment property. I mean, there's a lot of different things I could do with that money rather than sinking it into this illiquid asset, okay? So in my mind, it does not make sense after age 62 to park all of your money, all of your cash, okay, to buy a home 100%. There's other ways to do it. It's more efficient. So if you use a reverse mortgage, here's your benefit, okay? You can pay a fraction of the purchase price. You own the home. There's a potential for optional mortgage payments if you want to make them, which again would go into a line of credit, so it's money you can use. Again, the borrower is required to continue to pay all property taxes, homeowners insurance, maintain the property, keep it as their primary residence. They maintain all the rights of home ownership, and they preserve capital. Okay, so let's talk a little bit about what's going on with the market today. Right now, especially now, I mean, think about it. Anyone that just retired in the past few days, it's not been a pretty picture with the stock market. Okay, so you're looking at these retirement accounts that have dropped. There's a low return on investment right now. 76% of our retirees or people getting close to retirement plan on delaying it, mostly because they have to. They haven't planned well enough for retirement. Less than 7% of long-term care insurance, but approximately 70% are likely to need it. We live longer, which causes concerns about outliving our money. A majority of baby boomers have equity in their homes. And 44% of homeowners 62 plus are still making a mortgage payment. All right, so that's, again, it boggles my mind. And we've got over $10 trillion in seniors' home equity. That number is actually higher now. It's actually closer to 13 trillion. Okay, so lifestyle. My dad is the perfect example of this, okay? He's your atypical baby boomer. He does not want to slow down. He does not want to change his lifestyle. He's lived a very good life. He wants to continue to live that life, right? And our buyers are expecting more, or let's say not our buyers, but our homeowners that are 62 plus are expecting more from retirement, right? There's more options and things available for our retirees. I ask, okay, well, why would you want to move in retirement? Okay, now we can think about all of the obvious reasons. Sometimes people want to downsize, or right size into a smaller home. Maybe the home they have has stairs and they want to do something that doesn't have stairs. Maybe the property is too big. It's just too much to maintain. Maybe the house is getting older. And again, the maintenance costs are too much. But there's a lot of others too, like moving closer to family, reducing home expenses, change in health status, change in marital status, empty nesting, children moving out, or they need cash funds from, the sale of their home. So last year, 4.2 million baby boomers moved homes, but only 51% of them moved into a smaller house. Again, this highlights the fact that our boomers, just like my dad wanted a bigger, better, nicer home. He was just trying to figure out the way to do it. That allowed for him to do that. Now, I want to give you a little bit of an example. When I was in real estate, I had a client that called me, and they lived in a very, very nice area in Utah. And the wife had just fallen down the stairs. And the doctor told him, okay, you got to get out of this house. She cannot do stairs anymore. So they called me up. I went over, did a listing appointment, and I could sell their house for $500,000. The area that they wanted to live in was up the street, and all of their friends were there. It was a 55 plus community, but the start price was $700,000. And I told them, I'm like, okay, guys, this is going to start at 700,000. And I just watched their faces fall. And they said, Matt, we don't think we can do it. I said, all right, well, you got $500,000 from your sale of your home. Do you have any money in retirement accounts? They said, yes, we have $400,000 in there, and that's it. So if we take $200,000 out of that retirement account, it really leaves us lean. So we don't want to do that. I said, okay, well, what if you carried a $200,000 mortgage? And they said, we're on Social Security, Matt. We really can't do that. Nor do we want to. Cash flow is a big deal. I said, okay. Do you have any friends and family that could help you? And again, the answer was no. So I didn't know about this program. I didn't know it was an option. And so what happened was I ended up getting them into a $450,000 home in a community they didn't want to be in. And we made it work. Had we known about this program, had I known about it, this is what we could have done for them. They could have sold their $500,000 house, and the cash investment needed to buy that $700,000 home using a reverse mortgage as the loan would have only been $400,000. So they could have taken $400,000 from the sale and invested it in this purchase. The reverse mortgage proceeds would have brought in the rest, and they would have been able to be in this house and not have a monthly mortgage payment. And since they only had to use 400,000 of the 500,000 from their sale, they could have parked an additional $100,000 in their retirement account. I mean, that would have been Christmas for them any which way you could look at it. So again, it highlights the importance of the program. Not only for them, they would have been able to get into the home that they really wanted and improve their financial position, but also for me as the agent, I could have had a $700,000 sale, instead of a $450,000 sale. So again, these are the pieces on why this is so important. All right, so our baby boomers are trying to decide, do we upsize or downsize or stay where we are? Obviously, this is a program that can help you to access a pool of business that right now you don't think you can. A lot of our baby boomers right now, and really anyone that's retired that's sitting in their homes, they either own them free and clear, or they've got a ridiculously low interest rate on their current loan. All right. Both of them make it difficult to justify making a move, although many of them would love to do it. Okay, here's the simple math. Let's say someone's got a 2% mortgage on their house right now. They brag about it, right? Like, yeah, my mortgage is 2%. It's freaking awesome. But the reality is it still requires a monthly mortgage payment. I had a gal yesterday that I was talking to. I said, well, what if your interest rate was 0? Would you still have a mortgage payment? I mean, the answer to that question is yes. So if you can get into another home and potentially better your financial position at the same time, and you don't have a monthly mortgage payment at all, does that put you in a better financial position? And of course, the answer to that question is yes. So it's allowing our seniors the ability to look at the opportunities that are available to get them into a home that's going to be a better fit for their needs and still provide them with a financial position that is equal to or better than they're in right now. All right, so here is your wish list, okay? If you've got a client that's over 62, by the way, you can, if you're married and you're 62, can you have a spouse that's under 62 and do a reverse mortgage? The answer to that question is yes. But we're going to go off of the age of the youngest spouse in order to do the numbers. Obviously, if you've got someone that's in their 40s, okay, that's married to someone in their 60s, the person in their 40s has a lot longer to live than the person in their 60s, potentially. And so the loan is going to be a little bit different as far as the amount of money that they would have to bring in on a purchase or the amount of money that would be available to them in a home that they're currently in using a reverse. But at least one borrower has to be 62. Is your client ready to downsize, upsize, or move closer to family? Do they wish to purchase their dream home without having a required monthly mortgage payment? Do they live on a fixed income? Do they like a home that's a better fit for their physical needs? Would they like to move to a low maintenance community, increase their purchasing power, or preserve some of the proceeds from the sale of their home for cash reserve or retirement savings? Or would they like to have a line of credit that grows through time? Okay, qualifying, pretty simple. And again, at least one borrower has to be 62. If you're married, your spouse can be under 62. Must be a U.S. citizen or permanent resident alien. HUD counseling is required. Home must be a primary residence and occupied within 60 days. The funds to close must come from their own assets or gifted funds. Borrowed money is not allowed. And there are very minimal income qualifications. So for the South and the Northeast, we look at these differently than what Carl looks at when he's doing a normal forward mortgage. We're really looking at just residual income. So most people that are on Social Security, they've got enough money that they're making through Social Security to, satisfy the income requirement that we need for them to be able to do this. If for some reason they do not have enough money to satisfy that small income amount, or their credit is very, very bad, then we implement what's called a LISA. LISA stands for Life Expectancy Set Aside. And this is a pre-funded account that will help pay for taxes and insurance for decades in the future. It's also something that is optional if they want to do it. Okay, what type of properties work for a reverse mortgage? Well, 1 to 4 unit properties work. So yes, you can actually have a fourplex as long as you live in one of the units as your primary. You could rent out the other 3 and not have to make a monthly mortgage payment, which would be awesome. Manufactured homes built after June 15th, 1976. Condos do need to be FHA approved. PUDs, townhomes, and properties held in a living trust all work. Okay, so the easy math on this. If I'm 62 and I want to buy $1 million property, I would have to bring in about 70% as far as my down payment. So I have to bring in about $700,000 in order to buy that house. The reverse mortgage proceeds would bring in the $300,000 in order to allow me to buy that home. Now, if I'm 92, I don't have as much of a life expectancy. So we would reverse those numbers. At 92, if I want to buy $1 million property, I might only need to bring in $300,000 as far as my cash investment. The reverse mortgage loan would come in with the additional $700,000. So there's a scale there depending on the age of the client. We're going to know how much they're going to need to bring in if they want to buy something. Or conversely, if they have a home paid off free and clear, how much money is available for them in their line of credit that they'd be able to draw, or how much money would be available to pay off their current loan balance if they still have a loan and making a payment, and what would be left over. All right, very easy math for us. We just need to have birth dates. We need to know what the approximate value of the home is, either what they're buying or what they're in, and we can create these numbers very, very quickly. Okay, line of credit. Again, line of credit is awesome. It's growing. It grows independent of what's happening to the real estate market. And it's money that can be available for the client should they ever need it. Okay. All right. So I'm going to leave it up for time for questions. By the way, this is a little QR code that you can scan in if you wanted to do a little request to, to kind of put in for a scenario. But, you can reach out to me or to Carl, for any questions that you have. But I would highly recommend all of you to allow us to do the math for you, so that you can see it. In fact, let me do this. I'm going to call an audible here. While I'm calling my little audible, because I'm going to show you how I'm going to use this for my own retirement. But while I'm getting this all prepped, I can field it for any questions that you might have. So the door is open for any questions.
Matt, one thing I want to jump in and just suggest to everybody, while everybody's thinking of the questions that I know they have, one of the things I'm recommending to all the agents I know is to take a look back over the last year or two and just see, just see if you've had some clients who were age 62 or over, who talked about, listing their home or talked about wanting to move, who maybe you showed something to that they liked, but they didn't go for it because they either couldn't qualify for it in terms of their debt to income ratio. They were worried about using a lot of their retirement assets to pay cash for it, et cetera, et cetera. These kinds of scenarios that Matt's been talking about, because they're there. We've presented this to a local builder who just, who was really excited about it because they said they talked to people, there's a chunk of their clients that come in every year, and they're in that scenario where they've got a big down payment from the sale of their house in another state or what have you. And they want to move to Charlottesville to be closer to the kids and the grandkids, but they don't pull the trigger because they either can't do it or they don't feel comfortable putting themselves in a position to have a big mortgage payment or what have you, in their later years.
Yeah, thank you for that, Carl. And it's true. I mean, when as a real estate agent, you're always looking for opportunities where you can reach out and help people. And this is one, again, for those that are struggling, to try to figure out how they're going to make that next move. This is a program that could potentially help them do that and get into a home that's going to be a better fit for their needs. All right, so let me share my screen with you one more time here. All right, so this is my plan, okay? When I'm 62, I'm estimating my house value is going to be about 1.2 million. I'm at that point going to kind of own it free and clear. And if I do a reverse mortgage, I'm going to have a loan balance that's going to start out about 37,000. Okay, so the closing costs are associated with this are dependent upon the value of the home. And a portion of that, 2%, goes to FHA for the mortgage insurance. But the question is, okay, I have a home that's paid for fully and clear. Why would I do a reverse, right? The reason is I'm going to open up a line of credit now that's $356,000 strong. Now I'm saying that I've got about 1.5 million in my retirement accounts. And so as I move this forward through time, by the way, the line of credit plus the growth in my retirement account equals my liquidity. Moving this through time, a couple of things are happening. First, the house value is growing by about 4% per year. That's a pretty good average. The loan balance is increasing by, about 6.5% is the number we have in there. The line of credit is also increasing by that same rate. And by the time I reach 77, I've got $1 million of additional liquidity here in my line of credit that, again, I can pull out if and when I ever need it. Especially if there's a down year in the stock market, I'm not going to take money out of that account unless I have to. If I continue to just let this sit there and grow, by the time I reach 90, I'm at 2.6 million here. Okay. So again, this is additional money that I have available if and when I ever need to draw it. And again, something like this we can do for you with, again, your own retirement plan. Highly recommend that you give Carl and I the opportunity so that you can see this, because once you get it for yourselves, as far as what you could do, this makes all the difference in the world for how you present this program to others, because it really is that simple. Okay, what questions do you have? What can I go over? Was this beneficial? Was this helpful as far as learning a little bit more about how the program works?
I have a question.
Yes.
This seems too good to be true. So where's the catch?
Perfect. So not too good to be true, but too good to be free, right? So there is cost to that. And I kind of showed you in my last, when I had my screen pulled up, It's a little bit more pricey to do this. Now, again, that was for a $1.2 million property. It's going to be less for a smaller property, but there are closing costs that are associated with that. But this is how the program works. I mean, it's FHA insured. You know, it's just misunderstood. So you get to keep the equity position. Again, the research has been done by top financial planners. And again, I am educating financial planners every day on how this program really works, because most of them only get about a 15-minute tutorial on reverse as they take their series 7 and 9s, you know, to get their licenses. They just don't know how the program is designed to function. CPAs don't understand the stacking deduction piece of you know, using the reverse when you're making kind of a one-time payment and how that affects things. Divorce attorneys don't understand how with their clients they can use a reverse to help their clients get into homes after a divorce. So this is something that, again, is just all about educating, and we're doing our very best to help people understand, hey, this is not a doomsday program that you have to do. This is a program that you really should do early because it does help out in so many ways as far as retirement sustainability and cash flow.
Let me just jump in and put it this way. Dave Ramsey is wrong about reverse mortgages. Do not listen to Dave Ramsey.
Ramsey has a lot
Yeah,
of things that he
there I
says
said
that
it.
are good. There's some things that we choose to disagree with him wholeheartedly.
That's so true.
And one of them is this. I'm sorry, his advice for a widowed, you know, a woman who owns a home free and clear to go out and get a job because that's what she needs to do in order to make things work. She could easily set up a line of credit within a reverse and immediately have cash flow that would sustain her for the rest of her life, and she'd be fine. Anyway, we could go on a long time about Dave Ramsey, but
That's a different
Matt, this
meeting.
is very exciting. I actually have a friend that reached out to me that wanted to sell her farm, and she thought that's what she really wanted to do, but she's so attached to it, and she actually really wants to continue to do some of these retreats that she's doing, but she's 72, and she also wants to travel, but she doesn't have any money coming in. She doesn't have real cash flow coming in. So she's kind of on the fence. Should I sell and give this all up? Or how do I continue to do what I do, but put the money into the farm to create these retreats that will bring money in? So she's kind of, and so I'm actually talking to her this afternoon, and I did not learn enough here or understand it well enough to be able to share with her all these details, but it feels like this could be a really good option for her.
she's
I would agree.
72 today. I
Yeah.
want you to see how quickly this works here. So if I make her 72, give me just an approximate value on the farm.
It's about 1.2.
Okay, there you go. Does she own it free and clear?
That I do not know.
Okay, let's say that she does. Well, yeah, let's say that she owns it free and clear, and even if she's got a mortgage on it, this should be able to pencil really well for her. But this highlights how fast, if any of you have any clients that are interested in getting just a really quick look at what this could do for them, this is how quickly we can pull something like that together. So for her at her age, she would have a line of credit of about $428,000 strong, with $242,000 of that amount available for her in the first year to draw. After the first year, the full line of credit's available, and you notice that it grew, right? It went up by about 32,000. So watch how cool this is. If she needed additional cash flow, you know, and we just kind of throw in here, you know, 32 grand is the increase in the line of credit. and she wanted to take out $2,600 a month for the rest of her life. We're taking a little bit more than the cream here as far as the growth, but that's real money for her. It's coming to her that is not seen as income, so she doesn't pay taxes on it. And that line of credit stays very strong. So she could take out more money later, but I want to highlight this because even at 92, she's been taking money out of the line of credit. Yes, her loan balance is 1.5. The farm would be potentially 2.6. There's about $1 million of equity still remaining in this at the end. But the big key here is that she's been able to increase her cash flow position by $32,000 a year.
Yeah, or she could take out a larger draw from the line of credit to make those improvements you were talking about, Lindsay, so she could do those retreats.
Yeah, I mean, does she need $200,000 right off the bat? She can pull it immediately. She still has money here. Again, the nice thing about the reverse, she does not have to make monthly payments back on this unless she chooses. So again, really easy for us to be able to run this together. And I would just say, hey, I just took a class today. I'm aware of an opportunity and a pathway that could allow for you to achieve the goals that you're looking at. Would love to get you connected with Matt and Carl. And we can do a Zoom call like this. We'll go through, what her goals are. We'll lay down the different pathways in front of her, and we have a lot of fun doing it.
Great, thanks. That's exciting.
Okay, any other questions? I know, Teresa, you had some more stuff to go through, so I don't want to take more time than I'm allotted.
Yeah.
Okay, so I just wanted to quickly let you guys know about some of the things that's coming up. Can you guys see this? Okay, good. All right. We have a class coming up on Monday, the biased override class, from 1 to 4. It is totally virtual, so it's not in person. And then for anyone that needs some credit and would like to take a class on escrow management, we do have the broker forum coming up on March 19th. If you have a broker's license, you can attend the broker forum free and then stay for the escrow class that would be free. But if you just wanted to attend the class, you can register for the class. We have the March general membership meeting coming up on March 27th. This is the Professional Honor Society and annual award ceremony. So the whole GMM is dedicated to nothing but the awards. In the past, we've always had a speaker, and we've listened. We did the survey and people think that there was just too much in it. So we took all of that out and it's just dedicated to this. For those of you that need your 16 hours or even the 24 hours, Sweet 16's coming up on April 15th and the 22nd. I've put together the classes that you need to renew your license. All you have to do is just register for those 2 days, and that will get you all of your 16 hours. If you're a broker and you have that 8 hours that's additional broker classes, then we're holding day 3 on April 29th, and this will get you your full 24 hours that you need. We also have the certification at home with diversity coming up with Reggie Copeland on May 8th. This is part of the GRI program. They've added it here in the last couple years. So it is the 509 for GRI. So if you're in the middle of taking your GRI classes, that's part of it. In May, just giving you something to be thinking about. We had Valerie Long last year do a zoning update for us, and she's coming back for our May general membership meeting. And she's going to be talking about zoning in Charlottesville. We also have Alan Yost that's going to talk about Greene County. There's a lot of build, I guess, that's going up. He purposefully wanted to do the May general membership meeting so that he would have that whole first quarter to kind of tell you guys about how well everything's going. Working with buyers. You know, you may not be even in the GRI program, but these classes are very worthy of you taking them just for the knowledge. You know, knowledge is power. So don't forget about the educating part. You know, you as a realtor need to know, like, how am I different from the next realtor? If you were in a lineup, why are you going to stick out? So, you know, having more education and the knowledge, that's what professional development's all about. Another broker forum's coming up in June. So if you missed the one in March, we also have Woody Fincham that's going to be doing reviewing and appraisal. And then a Latte and Learn June 13th. Buyer's representation update. And we're going to have Pat Whithelm, Donna Patton, and Reeves Bailey to talk about that. Just a panel discussion. Working with sellers. We just had the SRS designation. It was a 2-day class, and they thoroughly enjoyed that class. I mean, the discussion was just so wonderful. Everybody learned a lot. This is part of the GRI program, Working with Sellers. It's 6 hours. So if you're interested in learning more, this would be a good class to take. Also, if you're interested in working with the veterans, military, we've got military relocation professional. That's a certification that's coming on June 26th. And this is all of the classes. If you're thinking, oh, well, what is this Graduate Realtor Institute? It's like getting a master's in real estate. That's what it is. There's 10 classes that you take. And whenever you start taking the classes, you would finish it up in a year. So I do the same classes every year, and I start with the business planning in January. So if you came in now, we're getting ready to have the sales contract class on March 25th, GRI 502. You would finish up next year in February after you take that GRI 501. So we just keep it going year after year, because this class, for those of you that's been in the business for a while, the new agents are using this program to get all 30 hours that they need within their first year. When they finished with this program, they're getting the GRI designation, the certification for At Home with Diversity, and the military relocation professional. So they're gonna finish this with all of their credits, a designation, and 2 certifications, all in their first year, guys. You're having brand new agents right out of the gate, their first year, learning all of this.
That's exactly what I did, Teresa. It's wonderful. I highly recommend it to have it. It's so much information that it's really important, especially for new realtors, or maybe realtors that have been around for a long time and kind of like forgotten. So many new rules and regulations. I've done all of it, everything. It's wonderful.
It's a wonderful program. And this follows you. This stays with you, the GRI program. If you decide, okay, I want to be a broker, and you know, you have to be in the business for 3 years to be a broker, to get your broker's license. And there's 4 modules that you have to complete. It's 180 hours.
Yeah, when is that? Are you guys going to do it?
We're looking to do that maybe in 2026. So I'm looking for at least 10 to 12 candidates that are thinking about getting their broker's license, and then I can hold it. So but this would take care of one of those modules. So it's not wasted. This would be an elective for other designations.
Yeah.
So like ABR, we're going to hold the ABR in September. So you would need an elective. Well, if you have your GRI, that would be your elective. Same thing with our SRS that we just had last week. This would be an elective for that. So anybody have any questions about education that I can answer? I didn't see, and I thought I had it in here, or maybe I passed it up.
I have a question.
We do have one more Latte and Learn. It's on April 14th on 1031 Exchange. YPN is hosting that one.
When is
I-
that, Teresa?
April 14th.
Can I ask a question?
Yes.
If you haven't started the GRI program right now, but you have already, like I just took the SRS, is that something that you can add to your, if you decide you want to start the GRI now, is it, you can add it to it, even
Yes.
though it, okay.
But you have to have it completed before. So there's a lot of people with ABR. It takes them sometimes 3 years to get, because I believe you have to have 3 years of, or at least three transactions where you were the buyer's agent. And sometimes that takes a little while. People that take the ABR class then has to complete some things in order to get their ABR. So it's the same with the SRS. You've done the SRS, but now you need to complete this. So if it's a year from now before you can really get that designation, SRS designation, then so be it. You're still working toward it. Any other questions?
When is the Sweet Six? Oh, sorry. When is the
No, no,
Sweet
you're fine.
16 again?
April 15th
Mhm.
and the 22nd. If you
15,
have
okay.
a broker's license, you would also
Ah.
need the 29th.
Yeah, I got to renew my license by September.
Okay, yeah.
Yeah,
This
perfect.
is the time, because last year we had it in July. We're not holding it in July this year.
Yeah,
because,
I noticed that.
yeah, we didn't have a very good turnout. So
Yeah, I have to have 24 credits. So, and even if I'm not a managing broker, I still can do those broker courses and it would count, right?
yes,
Okay.
yes. Any other questions?
Mhm.
Okay, everything is in the calendar. You should be able to find all of this. Another good resource is the education catalog that we sent out early on. You'll always find it in my signature. You can click on the education catalog for 2025, and you can take a look and see all of the different classes that's coming up. The dates for the classes are in there. So let me go ahead and stop sharing.
Teresa, can I ask Matt, would you mind sharing your information again?
Sure. Do I just put it in the chat?
Sure.
Sorry, when did you say the 1031 exchange class was?
I think it's April
14th.
14th. Hold on.
14th.
Let me take a look.
Yeah.
Mhm.
Oh, I'm sorry.
That's
It's
a
the 11th.
Monday.
It's the 11th.
Oh, it's the 11th. Okay.
April
April 11th.
11th.
Okay. Thank you very much.
You're welcome.
Thank you,
This was
Matt.
very helpful.
Welcome.
Yes, I really enjoyed this, Matt.
Yeah,
Oh,
that was amazing. Thank you.
Yeah, I'm
Well,
just wondering if it could help my sister.
Trust me, please, set up an appointment with me, contact me directly or Carl. We'll get you in for a one-on-one. I mean, literally, I know this sounds too good to be true, but it's just math. Okay. Math is math. It's worth hundreds of thousands of dollars for all of us, just in our own retirements, let alone people that we love and care about, and and for our clients. So please take the time to set up that appointment with us so that we can go through this with you in a better way for you personally. We'll hit the highlights and make sure that you understand it well enough that you're good. But it really does change lives. I mean, this is
Yeah.
that I do this. I absolutely love it, and I can see how it affects people that are in the program.
Very good.
So let me ask you, if somebody just go to a bank to get pre-approved, right? Like some people are stubborn, they want to work with their own banks. Do they offer that, or they have no knowledge of?
Yeah, no, that's a good question. So there are many lending institutions that don't offer the reverse mortgage. Those that do, I can tell you right now, because I have to like train and re-educate all the time. Those that there are only 200 of us that are certified reverse mortgage professionals in New
Oh,
York.
wow.
It's a very small number. So those that kind of do it, but they do it on the side, or they might not do it very often, they're not going to be able to give the full suite of knowledge, that
Sure.
we can provide.
Hold on just one moment, Matt. Oh, I think Ashley got off. Let's go ahead and let's finish this up, and then you guys can stay on and we can still chat. I just want to be able to take the recording off. So thank you guys for coming, and I hope
Yeah, and I
you
have
enjoyed this.
another Zoom. Thank you so